Today, I'm struggling. I've lost touch with my model, I think. So I am going to take a couple of minutes here to see if I can adequately explain to myself what I've lost, what it is that I seem to have lost touch with. Stepping out to the weekly, let me show a couple things. What do you see? You see a rejection block here. You see things way above you. Now that could be important, but you see an imbalance here, and you see a rejection block here. So we just descend in time and we go, okay, well, I'll mark that off, and then I'll mark this off, and then we'll see what happens when I do that. We go down to the day time frame, and this close, which you can't see because I've already taken it off, demonstrates that that rejection block is not valid. It's not holding anything down. And how I can do that is I can just throw this on here like that. And you go to the day time frame. And you can see it's closed over top of the mean threshold. So it price is going higher more than likely, even though it may go lower first. So you just go up to the next PD array, which is this imbalance here on the daily. So I've marked that off, and that's my dealing range, right? The low to high, that's my dealing range. What is it more likely to do in this range? You could also note that you have an inside day and then an outside day. Friday's an inside, Monday's an outside. What does that mean? Oh, we didn't test this. So until we do, we have to respect the fact that we're in discount. That's something that we should factor. When I come to the 4 hour, what do I see? As I plan this out, I say, okay, well, typically what I have always done in the past, and I don't know why I stopped doing it, is that I mark when I don't know which PD arrays matter. I mark off a dealing range and I go, and then I only focus on whatever's in premium and only whatever's on discount. And usually, if it's not touched before, that's what I focus on. I don't know how I lost touch with that, but apparently I did. And let me just say to you, I'm sorry that we've lost touch with this. I'm sorry that we have not been able to focus and we expanded what we were doing, even though we weren't quite where we thought we were. So I think you still have a lot to be immensely proud of, and there's no reason to beat yourself up. You're still learning, and this is part of the process. So just accept it. So as you look at the dealing range, then you say, well, what's been tested, what's been respected, what's held, what's been untouched. And as you work through all those questions in premium, you say, well, basically everything in premium has already been touched. So has it been respected? Well, this has been respected, that's been respected, and I guess you could say that's been respected. But then after that, these are things I don't care about. Those particular bars are because they're mitigation blocks or propulsion blocks, and I don't care about them. They're not in my model. So then if you go to the premium side, you have just a fair value gap. And I don't know why I'm calling that an order block. That is not an order block. I don't know what that is. I don't know. That is not a, so I can get rid of that. I don't know why that's there. That's not a 4 hour order block. You have only the fair value gap. And then I guess you could call this the rejection block. We could use that. So we could say we've got a 4 hour rejection block right there. I don't typically use those, but it's just helpful for bias. That's all. Okay. So let's just say that I throw that on. And sometimes I do. It's not that I don't ever do it. All right, I don't want to make this too long by blabbering on. And then you have a breaker right where the weekly imbalance is. So on Monday, you see the open here, Sunday to Monday, and then your Friday to, here's your new week opening gap is right there, and we were balancing right around it. So we drop down on Sunday, run higher on Monday. We're back on the low side, and there's really obvious liquidity on lower time frames. If you look at the 1 hour, and I think this is on playback. Yeah, it is on playback. So this is not real time. So as you look at this, you say, well, there's your 4 hour rejection block. Okay, now I can refine that and say, I don't need this anymore. I only need the 1 hour order block. Because if that gets taken out, then something else is going on. So I don't need the 4 hour anymore. All right. Now, as you look at this, we're completely in premium in discount. So we could be thinking about only buying, but we have another dealing range on an hourly dealing range, which is worth putting on there, so that we can focus on what's not been touched and what's in premium that has not been touched. Only this. Whoops. We have an hourly order block. You also have a 50% pullback, really obvious buy side. So if we fail to go lower, and even if we do go lower, probably that's going to get attacked. Okay, so now this is the 1 hour chart. So this is all I really needed to have on there for the morning. That's it, because the rest of this, look, there's nothing up here. There's no fair value gaps, and then on the downside, you have no order blocks, nothing. You just have this fair value gap, and you have this order block, and that's it. And then I guess you have this inverted fair value gap, which we could throw on there, but it just matters that, you know, what do we see closing below 48.50? We could go look at that. I don't want this to get too long. All right, so now I'm going to go ahead and pull this out of here. And all right, so this is also on playback, and we're setting at 9 o'clock in the morning. Now, what do you see on both? We're in discount. You got a pretty obvious sell side here. Okay, I only have 4 minutes to complete this. I have work to do. And what do you see? At 3 a.m., we run up, we bring in more liquidity, and we leave a breaker here, right there. We also, relative to this range, where's the most premium breaker? It's right there. There's only one. You could say that's one right there. But this is the one. And why is it the one? It tested liquidity, rejected, sent higher, and then ultimately failed. What we care about with the breaker is it must test liquidity. I'd forgotten about that rule. It's got to test liquidity. If it's just out in the middle of nowhere, it doesn't really mean anything. So I guess you could say that one is 2. So you've got 2 right here. 1, 2. This is the bigger one, so we could say that we prefer that one. Now, another piece of evaluative information that we could do is that we could say where has an order block. Now, what we care about, and now I'm starting to realize that what we care about is a breaker plus an order block. So if we put that on there and we say, all right, well, here's the order block. Was that respected? Yes, it was. Okay, so we'll make that yellow. And then we'll make the order block, or the breaker, red. Or orange, rather. Okay, orange is the entry. Yellow is the place we don't want it to see it get to. It can, but it shouldn't, and that should ultimately be our risk, is this just above this order block right there. Okay, and then where do you see the same thing? You see a thing right there, and then this is on the 15-minute, that's on the 5. So let me just drop to the 5-minute for sake of brevity. Okay, where's the same thing on the 5-minute? Now, the thing is that we work from the 15-minute, and then we break it down on the 5. So where's the same thing on the 5-minute? High, low, higher, high, lower, low. You could ultimately say, but that's where the order block is. This is where the breaker is. So the closest one that I can see, it's a judgment call, is right there. Judgment call. Where's the last order block that was respected? Right there. So if we could bring those down too. All right, now on the same thing on the 5-minute. There's the 5-minute, really obvious. There's the 5-minute, high, low, higher high, lower low, higher high. So you have that one, and that's higher, but it's also huge. So I guess technically the correct one is right there. But it also encompasses the order block. So that whole range is the thing. That's why I picked this one, is because this bar is like this bar doesn't mean anything to me, but this bar kind of has some meaning to me. But it is the highest bar. Now, again, if we break down this from that to that, where's discount? Is that in discount? Yes. Okay. So where's our breaker in premium? You have one here, but the 15-minute one's up there, so you ignore that. You only focus on that. Then as we play forward, this is where we think the market will decide what it's going to do. I'm not selecting these because I can see the future. I'm selecting them because of the time factor. So let's go to the 1 minute. And what happens on the 1 minute? 9:14. We've shown a little respect at this. We test down. I wish this had a timer on it. So 9:17, 18, 20, 21, 22. That's 21. Okay, so it attacked 9 minutes to the open with no news. So this is an okay trade to go long at. Right there, long. And boom, it runs up. Taking this short right here like you did is not an okay trade, because even though you saw that sell side, that's not your model. That's not your model. So even though you saw the respect there, it doesn't really matter. So it comes up here and it tests this. Now, we would have expected that it would just went through there. But what does it do? Does it show respect for this order block? I would say as soon as you saw that, you're saying that it's showing respect for the order block. And because it's wicked here and left no gaps, there's no inefficiencies. So it's got to go down and seek something else. So you get run out of this trade. And it happens at 9:45, which is irrelevant to us. We're waiting now for 10 o'clock. What happens? You get all the way down to 10 o'clock. And you test the order block. Does it invalidate the fair value gap? The 4-hour fair value gap? No, it doesn't even close outside of it. So does that mean we trade it? No, we're waiting. What do we see? We see a shift in structure right there as soon as we see that. So now this has been revalidated. This whole area is acceptable for a long. Could take it right there because it's 10 o'clock. But then the market waits until 10:30 to test that, and this became a 5-minute fair value gap. So look at that. And what do you see is that you're building a PD array on top of your already held PD array. And that's good. That's important. Go back to the 1 minute. And what happens? You get a run up and it struggles. It dives down right at 6:30, 6:36. Look at where it holds. And your target is way up here through the buy side. And off she goes. That's precision. What you missed, you're going to need to watch this video a couple of times to understand what you missed. So that's that.